around $128 per ton. It is multi-month highs, multi-year highs everywhere that you look in the metals as a sector. David Lennox, Fat Profits, now joins us to talk further on that sector. David, hi, good to have you. Yes, you could argue that it is about the weak US dollar and the heavy, huge stimulus measures that we've seen come in from various economies. That seems to be supporting the metal prices. But from here on, what is your sense, especially coming on demand?
Look, certainly when you have a look at what's happening, yes, it has been the introduction of stimulatory programs that basically went through to the workers of the world, and that did cause an explosion in money supply. And with that, with more dollars on the markets, that does devalue currencies, and we did see the gold price react accordingly. Going forward, we do believe that we've seen the first wave of the stimulatory programs, as I said, already going to the workers. We believe from here on in we will see a second wave where those stimulatory programs will go towards infrastructure building. And with that, as we saw in the GFC, infrastructure is a significant consumer of commodities, and that really is going to be the sustainable price rises that we are seeing in commodities over the course of probably the next couple of years.
So, what is your sense then? Is there a fundamental to the price rise that we are seeing in commodities? Are you saying that the stimulus measures will provide the much needed liquidity when it comes to infrastructure? Especially in India, we're looking at construction, railways, etc., where the metal demand is expected to come in from. What geographies do you see a stronger metal demand from, and what metals are you betting on?
Oh, certainly at this stage, you'd have to suggest that anywhere within the Asian region, certainly where there's significant populations and the need for further or updating of infrastructure, that would include also the US. So it really at this stage doesn't matter. We think generally across the board, because the pandemic has been so widespread and its economic impact so widespread, that just about every country that we're aware of is in some form of infrastructure mode. So really, as I said, that's going to be the underlying fundamental drive, certainly for the balance of this year. And of course, we have seen the commodity prices react. In terms of where we're looking, as you've already suggested, we're looking at iron ore. That's been one of the key, we think, improvers over the course of the COVID-19 pandemic, primarily because China's steel industry has really not missed a beat right throughout the whole term of the COVID-19 pandemic session. So from here on going forward, if we do see significant infrastructure programs, and there's no doubt that's going to happen, then the Chinese steel mills are going to continue to, we believe, produce significant quantities of steel, and with that, significant quantities of iron ore will be required.
Absolutely. When you look at the month of July, the Chinese steel output has been at record highs, 2% up month on month, 9% up year on year. So that clearly has been a huge push there. So that's about the ferrous metals. David, when you look at the non-ferrous metals, then we're looking at copper prices at 25-month highs. Zinc, nickel, lead have come back to their pre-COVID levels. There is some part LME inventory decline that we have seen. The other is the net speculative positions, which have been building on the longer side here.
Oh, yes, look, there's no doubt about it, especially with the non-ferrous, that when we do see a momentum move in commodity prices, that speculators do tend to jump on board and push the price probably a lot further than those fundamentals would suggest. However, we are saying that if we are right and we do see that ripple effect over the course of the rest of this year and certainly into the next year on infrastructure, then there's going to be significant drives on commodity demand over the course of what's left of this year and going into 2021. So speculators are looking at this and are now getting themselves set. And we do believe that, yes, there will be from time to time corrections as the market gets some doubts, but we do think those fundamentals now are pretty much locked in.
David, I have a final question. So do you have any favorites when it comes to the base metals?
Look, certainly at this stage, we've been very comfortable with iron ore. Here in Australia, we've been following our two big iron ore producers in Rio and BHP very closely and have had buys on them now for some time. Also, we're very keen on broadly across the base metals products. And we do think nickel at this stage is the one that we're following, primarily because of the sea change that we see coming. We're a little more, circumspect about copper. It hasn't got that same shine as we see perhaps with nickel going forward. And certainly, but at this stage, we think you can probably put your money across most of them and you'll get reasonable returns.
Right. So iron ore and nickel are the topics there. David, thank you so much for joining us.
All right. Well, I think we should keep an eye out on a couple of stocks, actually. Z is a stock that should be in focus. Yash tells us that the Bombay High Court has said that Yes Bank's petition has no merit against Z promoters, and hence it should be dismissed. So that should flash for you on the screen. So that seems like a bit of a relief that's come in for Z. And on the back of that, it's moved higher. So just keep an eye out on that. We'll wrap up on this show. But when you come back, Business Lunch will be with us. And in fact, we'll take the markets as well as this particular story ahead. Stay with us.
Brought to you by HDFC Life, सर उठा के जियो।
सिर्फ सोचो मत, खुद का बिजनेस स्टार्ट करो जीरो कैपिटल इन्वेस्टमेंट के साथ।